In this video, we're going to look at how stocks typically perform in January and also the rest of the year. But this is being recorded near the end of December. So January is coming up, and it's typically one of the worst months of the year for stocks. The S&P, or we're using the SPDR S&P 500 ETF, SPY is the ticker symbol. Long-term upward bias, so that generally means that the index or the ETF tends to move up most months. January is one of the few months where it's more of a coin flip, and this is actually slightly deceiving because we're looking at 2004 to 2023, and 2023 was actually a really good month for SPY. So that brought up the average. If we are looking at, if we go back and we look at the prior 20 years, so not including 2023, then so we're looking at 2003 to 2022. It looks a little worse. Only 9 years did the S&P 500 move up out of those 20. So 45% of the time it moved higher. That is by far the worst of any other month of the year. So in terms of monthly performance, it's one of the worst. And then just in terms of how often it rallies, it's by far the worst. So over the prior 20 years, not including 2023, average return minus 0.4%. That is slightly worse than June, which is another tough month, and the same as September, which is also a tougher month. But we did get that nice rally in 2023, so if we include that, we're at about basically a coin flip and just a very marginal type move. So January tends to be that kind of flat to pull back type month. And if we've been rallying hard coming into that month, January would be the month where we typically expect a pullback or a consolidation where the price just chops sideways. And then we tend to escalate more in the following months, February, March, and April is one of the best months of the year, rallying 16 times out of the last 20 years, 80% of the time, average gain of 2%. So that is including both the up and down years in terms of this average return. This is the study, what we call seasonality. So it's looking at how stocks perform based on the month of the year or at certain times of the year. It is backward looking in the sense that we're only using historical data. So it's not a crystal ball in the sense that we rely on this exclusively. We don't know what's going to happen this year in January. Obviously, it's yet to come. But this can give us a sense of what the typical type of month is like. So January tends to be a tougher month, and we can get that idea from this seasonal analysis, but it doesn't necessarily mean that this January will be a tough month, because half of them in the past they've rallied, and another half have dropped. If we're looking at the top months, January, or let's look at the worst months, January tends to be one of the toughest. February also pretty low. We're at that 60%. So that'd be 12 years it moved up out of 20. So a little bit better than a coin flip, but not too great on the average return, but at least it's getting better than January. But January one of the worst. February, then we also have June, one of the worst months, negative, low percentage increase. August, slightly positive in terms of average return, but again, pretty weak in terms of how often it rallies. September, definitely a month to avoid. One of the worst of the year in terms of performance. October, decent average return, but again, a little bit weaker on how often it rises, but it's still better than the coin flip. Best months that we want to be invested in. March, we start to see stronger performance in March, moving up 14 out of the last 20 years, and average gain of 1.2%. April, as mentioned, one of the best months of the year. May also tends to move up often, lower average return. So you could slot in October, December, a little bit lower win rates in terms of how often the price rallies, but higher average return. So May, October, December all kind of fit in there. Then definitely July, a strong month. Nice performance, 15 times out of the last 20 years for these 75% ones, 2.4% average return. And then November also, very strong month. High win rate, 16 out of the last 20 years, or 80%, and 2.5% average return. So that kind of maps out what the year looks like in terms of stock performance. And you can use that, incorporate it into your trend analysis or other forms of analysis, not typically used exclusively on its own, but can aid in some other trading or investing methods.